Bueno, estamos aquí en la conferencia, como se los digo, del Money Show, donde efectivamente en la edición de Miami hemos tenido la oportunidad de conversar con muchos de los personajes más importantes del mercado de capitales. Hoy tenemos la habilidad de entrevistar directamente a Kevin Polcari, quien es el Chief Strategy Officer, y obviously la persona que realmente maneja el dinero en la compañía de nombre Slate Stone Wealth, que obviamente es uno de los wealth managers importantes allá afuera. Kenny está siempre en televisión y lo tenemos ahora en la tribuna. Kenny, thank you for coming to our tribune. We're very happy, but I think the first question for the people is, what's going on in the markets? Because, come on.
So listen, the markets had a pullback when it got nervous over Liberation Day, which I completely understand. They did create a lot of nervousness and anxiety because people just don't know what was going to happen. We're starting to see now what's happening with the tariffs, right? We're starting to see them back up. We're starting to see deals being made between big countries, right? The UK, China. Those are significant trade agreements, which, by the way, need to be readdressed after decades of having an old trade agreement. It's like anything else. You kind of have to revisit it, and if you have to redo it, then you should redo it. I think it's perfectly okay. Now, the markets get nervous because they're unsure, but now the markets are starting to see the benefits of these new trade agreements that are happening, and so it's responding positively. And so I actually think the market's great. I'm very much a bull. I think we've had this massive recovery, which has to be tested. So if the market backs off a little bit, that's okay.
One of the things that captured my attention these days that in terms of fundamental analysis, everything is going to be based on earnings. And we are in a very difficult quarter because this quarter is where after the earthquake of Liberation Day.
Correct.
So are you in agreement with the other analysts that are saying we might going to revisit the lows at some point? Do you think that a pullback, it will be another buying opportunity?
Well, any pullback is going to be a buying opportunity. I do not think we're going to test the lows of April, which were 48.53 on the S&P. I don't think we're going to do that again. Because the hard data remains robust. It remains strong. Now, if the hard data really starts to weaken, that's a different story. But I don't think right now that we're going to test it back. Now, that doesn't mean that we're not going to test back the trend line down at about 56.70, where it was on the Monday when we announced the agreement with China. Right? We had this gap opening, and then the market's done nothing but go higher. That needs to be filled, so a retest of that level should actually happen. You want that to happen to see if, in fact, the buyers will defend that position. And so I'm in the camp that if it pulls back, it is absolutely a buying opportunity. But look, if you're a long-term investor, any pullback is really an opportunity either on names that you are waiting for that pullback to happen or names you want to add to, right? I don't want to add to these names that I like when the market's rallying. I don't want to chase them. I want to buy them on weakness.
Listen, I'm happy because they know que yo soy una persona que siempre está positiva y Kevin nos está diciendo, para que ustedes vean, yo sé que tienen subtítulos, pero a mí me encanta, él está súper bullish en el mercado y dice que probablemente nosotros podemos revisitar algo ahí entre el sector de los 5.500 y los 5.100 por allí, pero que él no ve que nosotros vayamos a romper esos lows como dice Paul Tudor Jones o Stevie Cohen o probablemente Jamie Dimon. And then the next question to Kevin is, Kevin, what do you think about the 10 years? The 10 years being 450, then 430 something today. People is a little concerned about that. What is your...
That's right. So here's what I think is going to happen. I don't think rates are going lower. I don't think Jay Powell is going to cut rates, nor do I think he should at the moment because the data is as strong as it is. I end up thinking, I think the 10-year is going to end up somewhere between 4.5% and 5%, which is okay. The market can function with a 4.5% or 5% 10-year if the economy remains strong. If rates go to 5% because the economy is weaker, that's a different conversation. I don't see that yet, but I do see the 10-year kind of hanging out and probably moving a little bit higher from where it is today, and then just staying there. Now, look. That doesn't mean that you can't be in the market. What you should really think about in a case like that is you want to own the biggest names in the industries you want. Because look at this. Names like Apple, which got crushed, or Nvidia, which got crushed in April because of all the nervousness, those stocks are actually higher than they were on Liberation Day because they've recovered faster. Why? Because they're the biggest names in those industries. They're not going anywhere. Apple makes $100 billion every 3 months. Think about that for 1 minute. $100 billion every 3 months. Where's it going? Right? Yeah. So it's a great opportunity on a pullback like that. And myself, for clients as well, on the pullback, we bought more.
Listen, Kenny, one of the questions you might have from families and clients of your firm, and they wanted to Kenny Polcari, is what do we do now with the Bitcoin? 104, 105, should we buy? Do we going to go to what Tony is saying, 200,000 sometimes in 2025? What do you think?
Yeah, so I do think Bitcoin is going to continue to appreciate. I own just a little bit. I own enough just to dip my toes, to make sure that I'm part of it. I want to see it look, the great thing about Bitcoin is you don't have to spend $103,000 to buy a Bitcoin. You could buy it with $50 every week. You could buy a fraction of a Bitcoin every week for $50, right? $100, $25, right? Which is the great thing about it. So if you have no exposure, you should probably get just a little bit. Not enough that it's going to hurt you. If Bitcoin goes to zero, it's not going to hurt me. I don't own that much of it, but I own enough to participate, to feel like I'm in it without being overexposed. And so if people don't own it yet, I would buy it on a pullback. I wouldn't chase it again, just like I wouldn't chase stocks. So if you want to own it, I'd wait for the market to get a little bit weaker, and on down ticks, I would be buying Bitcoin.
Listen, one of the things I'm in agreement with several people here in the U.S., and remember they are seeing that from overseas, is the strategy of President Trump in order to reset the commercial trading, deals and relations. What do you think is going to happen now with India, with Japan, with the European Union?
Yeah, so India's already come out and said they want zero tariffs. They came out this morning and said we want no tariffs at all, right? Which I think is clearly very good. I think the European Union is going to certainly come to the table after the UK come. I think all these countries are coming to the table, and I think the trade agreements will be renegotiated just to be fair. Not to punish anybody, but to be fair and level the playing field, which is all he wants to do, right? So you're starting to see that, and I think once investors in the broader economy starts to recognize that this is a positive thing, that they'll embrace it and they'll welcome it. I don't think we're going to see inflation skyrocket the way we did under Biden. If we see prices tick up a little bit initially, I think that's okay, but it'll be a one-time adjustment. Tariffs will be a one-time adjustment. It's not an ongoing inflationary issue the way it was under Biden. Every month it was higher and higher and higher. And so I don't think people should necessarily be worried about it. And in fact, if we continue to get these very good trade deals, I don't think inflation is going to be a problem at all.
I ask this question to mostly everyone. It's the most difficult one. And now we finish with this. Where do you think the S&P will be at the end of 25?
So I think the S&P this year is going to return back to normal. So if you have a 10 to 12% return on the S&P, all in, dividends and all that stuff, I think that's where it's going to be. Remember, we had a couple of years where the S&P was up 25 and 30%. Those were not normal years, right? You can't expect that every year. The long-term return on the S&P or the market is somewhere between 8 and 10%, and if you add in dividends, it's 10 to 12%. I think that's exactly where we're going to go back to. So up 10% from where we started the year.
What I like is your energy. What I like is you're super enthusiastic about the markets, and we're going to bring you back remotely or probably from the floor of the New York Stock Exchange.
Happy to do it. I spent 40 years there. I'm happy to do it.
We will do it. Thank you, guys. We'll go back to you. Vamos con ustedes de nuevo.